Hi guys, it's Thomas from COTBASE.com and I'm here today to introduce you to COT analysis. First of all, I have to tell you some legal stuff. This video was created using the analysis features of COTBASE.com. The website and this video contain no investment, tax, or legal advice. Our terms and conditions can be found at www.cotbase.com. Commitments of Traders is a weekly report from the U.S. Commodity Futures Trading Commission. The report collects information on the traders of U.S. futures markets. The primary goal of the report is to increase the transparency of markets by showing a snapshot of its main participants' bets. This information is a goldmine for smart traders who are now able to jump on opportunities, potential big moves resulting from over or under positioning of traders. These information are also excellent confirmations or sometimes non-confirmations of current trends. Remember, you are profiting from changes in prices that are caused by traders building up or cutting down positions and not from the fundamentals. If you analyze COT data correctly, you will no longer have to watch the fundamentals since the well-informed participants have already done it for you. Every trader's dream is to follow the tails of the smart money. With COTBASE.com, you'll get all the tools needed to find the big guys and profit together with them. So let's get down to business. How does a COT report look like and what does it contain? Classic COT data divides traders into three groups: commercials, who are generally the producers or processors of commodities, large speculators, who are usually investment and hedge funds, and small speculators, probably like you, holding fewer contracts. The data comes out weekly, usually on Fridays. It's important to note that the report shows the situation right after Tuesday's close. This time lag, however, does not make the data irrelevant. Let's see an example. This is the official report for OATS on 12th of January 2010. From the lots of numbers, we need only the most important ones, the long and short contracts owned, to calculate the balance, net amount of contracts. If this value is negative, we can state that the given group of traders, here in the second column the commercials, are net short. These guys are the biggest participants of most futures markets. They are considered smart money. The first column is officially named non-commercials. In plain English, these traders are the large speculators, including hedge funds. They are typically trend followers and are often right, but sometimes very wrong. These mistakes from speculators can be pinpointed by following the extremes of the data. If at a certain time the speculators are overextended in the number of contracts they are holding, it could easily result in the exhaustion of the up or downtrend. Remember, prices usually fall because no more buyers are left and not because of the reason behind the uptrend is gone. On COTBASE.com you can follow these extreme situations with ease. Let's see how. We have a tool to measure how overextended the market participants are. This is called the COT Extreme Indicator, and what it does is it compares the current level of commitments to its history. So if something out of ordinary happens, you're in the zone. We also calculate for you where the data stands in a given time range. This is called the COT index. Let's get back to our example report. The third column is the non-reportables, who are basically the small speculators holding fewer contracts than the reporting limits. Following these guys can be especially rewarding, according to our extensive statistical analysis. Another important factor of COT analysis is the magnitude of change in the data from last week. We give you these statistics as well. You can compare the change to the last 52 weeks or all-time range of the historical data, as well as manually set ranges. And now, let's see how this report looked like right after it was issued. Our system showed that the current positions of commercials, red line on the chart, were at a long-term extreme, and also the magnitude of change to that level was remarkable. Translating it to plain English, the well-informed participants of the market viewed current prices high and wanted to sell their inventories. Also, both large and small speculators, green and blue lines, were overextended, meaning that their future buying capacity was running out. This, as you can see on the chart, signaled a top, and in the following weeks, the market dropped by 22%. By the way, check out how nicely the bottom at 190 was also signaled 6 months later. We give you all the tools you need to analyze the commitments of traders. As a bonus, we create each week a COT video review on YouTube. By the way, the data comes in two formats, futures only and futures and options. The The former one is easy. The numbers in the report refer to futures contracts the traders are holding. Futures and options data is a bit different. It translates options positions to futures contracts and adds the value to the real futures positions. The translation is done by multiplying the outstanding options by their relevant deltas. You can find more information on this at cftc.gov. For our purposes, we recommend you to use futures and options data on markets where options trading is developed. For example, on crude oil or gold, the more liquid contracts. And now, let me show you something remarkable. At COTBASE.com, you can access new types of COT reports as well. We are the only analytics source for these information on the internet. What am I talking about? I'm talking about disaggregated, traders in financial futures, and CIT data. Disaggregated, as its name suggests, disaggregates or further divides the previously explained trader categories into producers, merchants, processors, users, swap dealers, money managers, and other reportables. Traders in financial futures data deals with financial contracts like bonds or stock index futures where producer or processor cannot be interpreted. It classifies traders into the following groups: dealers, intermediaries, asset managers, institutional investors, leverage funds, and other reportables. The last interesting set of new data is the CIT or commodity index traders that practically filters out the big commodity index tracking investment funds that are holding lots of futures contracts on the behalf of their investors. Read more on these reports on COTBASE.com. For more examples, check out our typical setup section. On education, visit COTBASE.com where you'll find interesting research, articles, and book reviews. Be sure to get back to our YouTube channel each week for news on the recent developments in the data.